Good evening, everybody. Thank you, Krishna, and we welcome you all to the earnings conference call for Transformers and Rectifiers India Limited to discuss the company's performance during the quarter and 9 months. We concluded our board meeting today and have uploaded the financial results as well as the investor presentation on the stock exchange. I believe you must have got a chance to go through the same. Operational key developments. Let me quickly take you through the certain product developments that have taken place during the past quarter. The company has successfully dynamic short circuit tested 50 MVA, 53 MVA, 105 MVA and 250 MVA single phase auto transformers. The test was conducted at National High Power Test Laboratory, Bina, and CPRI Bangalore. With successful completion of this test, the company has crossed a commendable milestone for successful dynamic short circuit test on a record of 150 plus transformers in the past 2 decades. This feat demonstrates sound engineering and company's adherence to the quality standards and the capability to manufacture and deliver high rating and reliable power transformers to various specifications. Secondly, during the quarter, the company successfully factory acceptance tested multiple transformers of 210 MVA generator transformers with indigenous technology, one of the prestigious client in India. We supplied the transformers. The supplied transformers will form three-phase bank of 630 MVA at customer site and shall facilitate uninterrupted power flow. Now let me highlight the order inflow and the order book position of the company. During the quarter, the company received new orders worth 701 crores, growth of 69% year-on-year basis, versus rupees 414 crores orders received during the same period last year. Out of new orders received during the quarter, 72 crores are for exports. During quarter 9, FY24, the total order inflow is rupees 1,636 crores. Unexecuted order book as on 31st December 2023 totals to 2,572 crores, with 60% of the orders from utilities, 27% orders from industrial customers, 8% from renewables and 5% from export. Currently, the domestic market tenders and inquiries for domestic market of value 4,256 crore are under negotiation for bidding stage, whereas in export market, export inquiries of $127 million are under negotiation. Now let me talk about the geographical split. What we are seeing is that the demand of the transformer market is outgrowing the speed of growth of export market. However, going forward, due to the supply crunch that we are seeing in the export market, we expect India to be a bigger beneficiary. At present, domestic revenue is at 88% during the 9 months and 12% exports. To summarize the current industry landscape and the company's position advantageously to expect to participate in growth story of transformer industry. With this, I conclude my remarks, and now I would like to hand over the call to our CFO, Chanchal Rajora, for his comments and financial parameters.
Thank you all. Thank you, MD sir, and good evening to everyone. A warm welcome to our earnings calls. I shall summarize the standalone financial highlights for the quarter and the 9 months ending December 2023. During the quarter, revenue from the operation was 365 crores, a growth of 13% from 323 crores rupees of quarter 3 FY23. During the quarter, the EBITDA was at 37 crore rupees, a growth of 15% from 32 crores of Q3 FY23. EBITDA margin was at 10% as compared to the 9.7 of the corresponding quarter. The improvement in the profitability is on account of the higher margin accretive product mix. During 9 months FY24, the revenue from the operation was 773 crores, During the 9 months FY24, the EBITDA was at 64 crore rupees. During the 9 months, the export turnover was 95 crore rupees, comprising 12% of the revenue from operations. The company has a customer base spanning over more than 25 countries. The unexecuted order book as on 31st December 2023 is rupees 2,572 crore rupees. That concludes an update on the financial highlights of the company. I shall now request the moderator to open the floor for the question and answer session. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for the moment while the question queue assembles. The first question is from the Subhadip Mitra from Nuvama. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So my first question is, given the strong order book position, as well as the fact that you have closer to 5,000 odd crores of domestic and export orders under negotiation, would you be giving any guidance or a target on order inflows, revenues and margins for FY24 and 25?
Hi, Subhadip. How are you doing?
Perfectly fine, sir. Thank you.
Subhadip has explained in the last earnings calls also, the order book what we have is right now is for the next 18 months, 15 to 18 months time delivery period, right? And we expect that we will be able to deliver these orders into the that prescribed times. As far as the margin is concerned, the significant margin, as you see in this quarter also, margin has improved, and we see that slowly the margin will gradually improve and it will reach to the industry levels.
Understood. So if I am understanding you correctly, we are saying that the current close to 2,500 odd crores of order book would get split over the next 18 months or so. And when you are talking about industry level margins, am I to assume this would be somewhere in the 10 to 12% range or higher? Is there any range that you would like to talk about?
Yeah, you can consider that, please.
Understood. So secondly, in terms of your PAT margins, now while EBITDA margins have clearly been improving, PAT margins remain subdued, possibly because of the effect of interest costs, and I'm assuming as your top line goes on increasing, maybe interest costs will not go up in the same tune. If you can just throw some light on that as well.
Yeah, so but the PAT margin is low because of the one reason you already mentioned, and the second reason is that H1 was not good for us. But going forward, when you close this financial year, PAT margin will be significantly much better as compared to what they are today.
Okay. Two questions from my side, last if I can accommodate. Firstly, on working capital, sir, in terms of working capital levels or debtor levels, where would we be for the 9 months?
Yes. We are very comfortable right now on the working capital, and we already planned our working capital to achieve the target what we are anticipated in next year and beyond that.
Any number that you would want to say as to what is your targeted working capital level? Would you be guiding for something?
But Subhadip, actually we are trying to reduce our working capital numbers by putting up different efforts. And at present, we don't see that any increase in the working capital for the next year's turnovers achievements.
Sorry, I think I got cut off. Could you just repeat? You're expecting next year working capital to be...
Should be remain at the same level.
At the same level. Okay. In terms of number of days of sales.
In terms of the absolute numbers, number of days, if you see that we are working on the direction to bring down the working capital days up to 120 days.
I read you. Understood.
Yeah. Yes.
So lastly, on the GetCo issue with regard to the pending payments, how much is pending and how much has been received so far?
We have already received 90 odd crore rupees of the payment from the GetCo, and the balance payment is in line. As and when it is falling due, JETCO is releasing the payments to us.
So how much is pending?
Right now, I don't have the absolute numbers that how much is the pending, but this is the payment basically as and when they are falling due. Now JETCO is releasing on time.
Understood. My last question would be with regard to the orders and the negotiation that you have, I think about 4,200 crores of domestic and maybe another 1,000 crores of exports. In your opinion, ballpark, how much of this would you see culminating into actual order inflow? Would that be?
I would not like to comment on that at this moment, Shivaji.
Understood, sir. That's it from my side. I'll join the queue for follow-ups. Thanks so much.
Sure.
Thank you.
Thank you. The next question is from the line of Khatija Mantri from Capri Global. Please go ahead.
Good evening, sir. As far as I remember, in our last introduction, you had said that we would have a flattish revenue in FY24, so which makes the asking rate for Q4 revenue is about 600 crores, and which is like 40% YOY growth you would have to do. So are you confident of achieving this kind of revenue growth in Q4? And also, what is the status on our export orders? Like we were trying to get our foot into new geographies. So what is the status now?
Okay. Hi, Khatija. How are you? It was nice meeting with you last time, right? We are working on the direction as what we have discussed last time, that this year we are trying to close somewhere near to our last year numbers because of the first half year, and we are quite confident that we'll be able to reach quite near to our last year numbers in terms of the revenue as well as on the EBITDA side. As far as the export is concerned, you can see that almost every quarter we are receiving the sizable amount of the export, and if you see that in my present revenue, around 12% is from export side. And as you see in my present negotiation level, there are around $127 million worth of orders which are under negotiation. So we are actually working on the directions what we have been discussing to have an order book for the next financial years.
Okay, sir. Thank you so much. I'll join the queue.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Gunjan Kabra from Niveshaay. Please go ahead.
Hi, sir. Thank you for the opportunity. So my first question is that last quarter you guided an EBITDA margin of 14-15%. So right now we have scaled it down to 10-12% as per the previous participant's question. So at what level of scale can we expect those margins to hit of around 13-14% from the current 10%?
Gunjan, 13-14%, what we had said it, we had said it from the financial year of 26-27 and 27-28. So that we still foresee that it will be on that level only. The 10-12% what we are just I just mentioned to Suvadeep is the industry average, and which we will achieve in coming financial year. That is what I explained.
Okay. And the last quarter we had certain non-receipt of dispatch instructions from few customers which actually reflected in our revenue last quarter. So how much of that has been recognized this quarter? Or
if you see in our board presentation, we have not mentioned anything about that. So we had
mentioned that it was around 40-50 crores.
Around 20-25 crore rupees of the transformers were stuck upon that. That has been liquidated now.
Okay, got it.
It's a normal quarter to quarter phenomena now. So it will keep happening. You know, at last time it may be possible in the last moment some DI doesn't come, and then it will reflect into the coming quarters.
Okay. And sir, if you can share the trade receivable numbers and the short-term borrowing numbers as on 31st December, that would be.
You can get in touch with me directly. I'll give you that numbers.
Okay. Thank you so much, and good luck to the entire team.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Subhadip Mitra from Nuvama. Please go ahead.
Thank you for the follow-up. Sir, two qualitative questions from my side. Firstly, with regard to the JETCO issue, if you could also throw some light on, what are the remedial measures that have been taken by yourselves as well as JETCO to, ensure that something like this doesn't happen again?
Subhadip, we have strengthened our internal policies and internal control to the best possible manners, and from where these kind of the things will never happen again.
And JETCO is also working on their team. They have also strengthened certain processes of theirs where the DIs and everything which was computer generated, which used to normally do manually. They have also strengthened their IT team so that all this manual generation has to stop.
Understood. So this issue in no way will impact your qualifications for bidding for any of the other, let's say, Power Grid or other larger...
No. We have been constantly receiving orders from Power Grid even after this issue. And in the last quarter, how many orders?
Subhadip, if you have seen my announcements into the exchange, in last quarter we have received 450 crore rupees of order from the Power Grid and 120 crore rupees of order from Uttar Pradesh. So this issue has not at all affected on our order inflow, and actually this is not it is not a blacklisting on anything. It is a small time phenomena which has been over now for us.
Perfect. That makes it amply clear. Secondly, sir, I believe that there is a certain amount of promoter pledge of shares also that is there. If you can correct me on that one, as to what is the quantum and, do you see that reducing over a period of time?
Subhadip, these pledge of share is with our banking partners, right? And these pledge of shares are not today. This has been for the years. So since we have the banking limits with the bank, these are there and these are going to be remain with the bank till we have the banking lines.
Understood. So these would be for, letter of credit and other things that you require for bidding for the contract?
What?
The pledge is essentially there with the banks for working capital related loans or for LCs?
There's the working capital funding what we have with them. Fund-based and non-fund-based limits what we have with the bank, it is related to that.
I read you. And any indication on what is the strike price for the pledge? At what price were they pledged at? At what stock?
It's been long since the beginning of the limits. These are there. You don't remember even we don't remember that. You will find it, Subhadip, significantly because my stock price is high, but it is since almost now, say like State Bank, we are working for last 40 years with the State Bank. So it's been since beginning.
Perfect, sir. I think that answers my question. Thank you so much.
Thank you. The next question is from the line of Nilesh Doshi, Green Lantern Capital. Please go ahead.
Good evening, Nilesh bhai.
Very good evening, sir. Yeah, very nice. Thank you, sir.
Thank you.
Can you hear me, please?
Yeah, we can hear you.
Sure. So couple of questions, Chanchal. One is that we are targeting about last year revenue in the current year, which means, as you already committed, you would be doing about 600 crore revenue this year. I mean, this quarter, Q4. Now, ours is not a seasonal industry, and the capex cycle in our country is it's moving at a very fast pace, especially on the energy generation and transmission side. So do we expect that you should be doing about 2,200 crore kind of a revenue next year?
We are working on that direction only, Nilesh bhai.
Yeah. The second is you are still alluding about industry average EBITDA margin, but what I see from the industry and the gross margin at which the new orders are being taken by the industry, I think that comes out to be something like at least 15% EBITDA for the new orders, and next year. So how are we placed in that scenario?
Nilesh bhai, actually, you are absolutely right what you are saying that. But as I told you earlier also that effect will start coming from the end of the next financial year. Because right now in this present year and in the first half of the next year, we will be executing the orders what we have say a year back orders or year-old orders, right? So the EBITDA level will be not at that level what we are saying that, but definitely going forward when you will go through the last quarter of the next financial year or the FY26 levels, we will be close to those numbers somewhere.
Yeah, and lastly on the technical side, can you help us understand, like you developed this new kind of import substitution transformers, single phase, which should be installed in configuration of 3 single phase transformers. How big is the opportunity and why these were being imported in the past?
No. It has never been imported. India is manufacturing these transformers from the beginning. What happens is when the transformer size becomes big, the transportation the logistic is the issue. So they prefer to go with single transformers and then they make a bank of 3 transformers when it reaches the site. Moreover, when the transformers, especially when the transformers are going to be installed in the hilly areas where the logistic is a big issue because the turning radius is not there, so you have to restrict the weight, and that all leads to the use of single phase transformers. And also the trailer size. If when we make 765 kV transformers, they are all single phase transformers, each of 500 MVA. So single transformer would have been 1500 MVA transformer, which will be weighing something where around 750 to 800 tons. So that we don't have that kind of roads, that kind of bridges. So we have to break them into single phase transformers, and then when it reaches the site, they are connected. So this is not a import substitute, but we have been doing this. India is doing this since ages. The expertise in making those transformers.
So what we got tested and approved in the last quarter is something which we have been doing regularly.
Yeah. No, it is the short circuit test, we were talking about. Short circuit test of these large transformers has never happened in the past. We are the first to have this transformer, 250 MVA transformer short circuit tested, single phase transformer short circuit tested by the laboratory in Bina. So this has not happened in the past. This is first time it is happening.
So does that mean that even our competitors who are MNC in this space have never done short circuit test in the past?
Because they had no opportunity or they never had the orders like this before. So you do this test only when you get the order, not before that. Right? You can't get the transformer tested for short circuit, which costs you something like 5-6 crores of rupees, just for testing and then having that as inventory till such time that you get an order. So these are tested against the orders. If they have not received the order, they will not get it. Something like that.
Okay. So does it qualify as something for the international standards or any export?
See, it's not that every electricity board in the world, they ask for this short circuit test. It only increases our reference list that we have done this. So that will be an added advantage while qualifying us for the supply of the transformers in the areas where we have not been supplying. So that will be the added advantage to us in the areas where we are not there. Otherwise, it's not that.
It just builds the confidence in the customer that we have a team which is capable of manufacturing and designing a transformer of that size.
Yeah, that's nice of you, Satyan. I'll get back to you in the queue.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Namish Gupta from Namish and Gupta Company. Please go ahead.
Hello. Sir, is my voice audible?
Yes, it is audible.
Okay. So, sir, congratulations for the nice result. And, sir, my question is regarding the, sir, I mean, recently I saw your interview on a leading news channel, sir, wherein you have like conveyed that by March 26, companies targeting a revenue of approximately 3,000 crore and EBITDA margins of around 18 to 19%, sir. So I just want to know, sir, what is the basis of this confidence, sir?
See, I tell you, when we came out with the IPO, our EBITDA margin was 18% to 20%, approximately. And the kind of the market now, or the kind of demand which has come now, we have started looking at that kind of EBIT margin. Because 18 and 20% is nothing new to the industry when the demand is like this. So, this is what our dream, that we would have these kind of margins in the years to come. When it will all depend on the market condition, but I can foresee that this will happen in very near future.
Okay.
Ramesh,
Sorry.
just to add up what Chairman Sir is saying right now, this confidence is also from there on the gross margins, what we are right now quoting for those years. So if that number is converted based on those gross margins, definitely we can foresee that.
Okay. And so one more question I have, sir. I mean, sir, there is a listed competitor in transformer sector like Shilja Technologies. Yes, hello. Now I am audible.
Yeah, you are audible. You are audible to us.
Okay. So, sir, there is a listed competitor, I mean, Shilja Technologies. They are mainly in the renewable space, and sir, their majority of their share is like export sales, sir. But I just reviewed your turnover and your investor presentation, sir. Our export sales is very less, sir. And I mean, what I feel like, sir, in export market, the margins are used since their margins are like more than 20% from last 3-4 quarters, sir.
Yeah, Ramesh, Silchar makes very different transformers from us. We are basically into EHV and high voltage transformers and power transformers. Silchar is basically into distribution transformers, and the rating of transformers is very small. So the transformers that we manufacture are very different from what Silchar manufactures. So the product is completely different.
Okay. So, sir, I mean, just a last related question. Does this distribution transformers are more like margin accretive, sir? I mean, and power transformers are less margin accretive?
Sir, I didn't get your question.
Sir, I'm asking, since they are in like distribution transformers and their margins are huge, so does the distribution transfer carry huge margins and power transformers are normally not that margin accretive?
It is not really like that, Nimesh, that the power transformer has not that good a margin. Only thing is we are not very much there in our network for the export is not yet established. When we are established player in the export market, our margins will be also like that. And that is one of the reasons why I said in one of my interview that, the 18-20% is not far away in the years to come, because we are gearing up for the exports. We are building the team for or building the network for the representatives throughout the world, one by one, so that, we don't fail in our commitments to our customers for the supply of those large transformers. So there is a huge demand. Like in America, we have been saying that America the raw material to sales ratio is something like 0.3, right? So that is 30% is raw material. And even if we go with 60% raw material and considering 10% to 12% as the logistic charge, we are still cheaper by 20% to them as far as the prices are concerned. So that kind of margins are there, but we have to enter that market. We have to have a proper network for the supply, not only for the supply, but also when you supply large transformers, what you have to have is you have to ensure that there is somebody to look after your transformer in case of a small issues the customer may face in case of an accident. So they will also ask us, so it's a big work, so we are working on that. And shortly, maybe in another 6 months' time, we will have proper people at proper places for the supply and also for looking after the maintenance of the transformers.
Thank you. The next question is from the line of Prathamesh Dahake from Motilal Oswal. Please go ahead.
Hello, sir. Am I audible?
Yes, good evening.
Hi, sir. How are you? So my first question is, if I were to compare December 23 quarter versus December 22, I could say 2% EBITDA accretion has been account of reduction in other expenses. So what are these expenses that we were able to curtail, which helped us in gaining those 2 extra percent?
Prathamesh, there are lots of issues, lots of expenses covered into that. One is that our raw material percentage has reduced into that, as well as our overheads both have reduced. So that has increased the EBITDA levels in that way.
Yes, sir, but if we were to look in terms of common size, other expenses, I mean, we don't get the breakup in quarterly reports as to other expenses which are mentioned. I felt that 2% reduction has been in other expenses. So just wanted to check what are these heads which got reduced and are they sustainable in the longer run?
There are lots of components into that, and they are sustainable in the longer run. As and when we will increase our revenue size, those expenses will go down further.
And moreover that, the orders which we are executing is still most of them are last year's order. And now whatever we are quoting is with the lower material cost or material to sales ratio better. That will give us the extra margin, EBITDA margin in the coming year or the coming months.
Okay, so going forward, you believe 75 to 78% gross COGS percentage is something which you feel will be a stable range?
Yeah, it will lie between 67 to 75, 76% raw material, in the coming time. So 76 is as on today, but now we are quoting with less than 68% as raw material.
That's wonderful, sir. Okay, these were the only 2 questions from my side.
Prathamesh, that effect will not come immediately.
Yeah, understood.
It is a coming time. Next year. It's all next year.
So the one which you are quoting at 67% will be executed or delivered in, let's say, in next 12 months or next 9 months, if you could understand?
18 months. In next 18 months.
18 months.
Yeah.
Oh, okay, sir. Understood. That's it from my side, sir.
Thank you.
Thank you. The next question is from the line of Surbhi Sarogi from Smith Capital Market. Please go ahead.
Hello. Thank you for the opportunity, sir. Sir, my question is, can you repeat your revenue guidance for FY24?
We shall be closing very close to last year's.
Surbhi, we will be closing somewhere near to our last year.
Okay, sir. Thank you.
Thank you. The next question is from the line of Nilesh Doshi from Green Lantern Capital. Please go ahead.
Yeah, thank you again, Chanchal. Just one question. the kind of inquiries we are seeing, any plans for debottlenecking or additional CapEx to increase the capacity over next 6 to 9 months?
No, Nilesh bhai, we don't foresee next 6 to 9 months. Even next, we don't foresee for next 12 months. And
Okay.
as I explained you, for the additional new revenues, next year will be coming up a CapEx requirement, a CapEx expansion.
So how much time normally you require for a CapEx in terms of putting up a bay and facilities?
8 to 9 months time.
Yeah. So somewhere, that's what I'm asking. Like somewhere by end of calendar year 24, we should be working. We may begin to do a new CapEx.
You are right, sir.
Yeah.
Yeah. Okay. Thank you, sir.
Thank you. As that was the last question, I would now like to hand the conference over to Mr. Satyan Mamtora, Managing Director, for closing comments.
Thank you to each one of you for being part of our earnings call and participating in this call. We appreciate your support and trust in us, and we hope we have been able to address most of your queries. In case of further queries, you may reach out to our investor relation advisor, Ernst & Young. They will connect with you offline. Thank you very much.
On behalf of Transformer and Rectifier India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.